Welcome to Decoding the Budget 2025, a special podcast by Reliance Smart Money. I'm your host, Drupad, and today we are diving deep into the most anticipated financial event of the year, the Union Budget. The budget not only sets the tone for the nation's economic roadmap, but also impacts businesses, investors, and market in profound ways. Joining me today is someone who needs no introduction, Mr. Vikas Jain, research head at Reliance Smart Money. With a vast expertise and keen understanding of the financial markets, he will help us decode what to expect from this year's budget and how it might shape India's economic future. Without wasting no time, let's welcome Vikas, hear from him what to expect out of this financial budget. Welcome, Vikas. Welcome to our podcast. And thank you for taking out time from your busy schedule. So, basically, just to give you an understanding about this podcast, this will be where we will be decoding the pre budget and we will be sharing, we would like to share your expert's opinion with our audiences out there. Before we jump into the budget, start with a quick recap. How have the markets performed since the last budget in July 2024? What have been the major highlights according to you?
Thanks, Dhruvat, for inviting me in the podcast. So, if you look at the structure of the markets, so this budget, first Union budget, would be full-fledged budget for Modi 3.0 reforms. So, the last budget was been pretty short-lived. It was about just for 6-7 months. So, it came on 23rd of July, and before that, it was on 1st February budget. So, that budget was before elections, a 6 months budget, and the next budget was post-elections in 23rd July. So, the government didn't have any major scope to do anything. Markets were in to sub 2400 500 odd levels. We saw scaling the markets to new all-time high in September, mid of September, and then from September onwards we are been in corrective phase. So the markets have witnessed its own doldrums. So we scaled a new all-time high. Now we are again 6-7% lower compared to the last budget what we came in. So what lot of things have been changed both at the micro factor. So we saw some amount of announcements with respect to Donald Trump gaining the new presidency in the US. The dollar index moving high near 210 levels, so which pulled out large amount of money from the FI perspective from the emerging markets. And the quarterly result season for the second quarter and third quarter were being muted. So where we were heading for 10-12% earnings growth has been lowered to 7-8%. So we have witnessed good corrective action near to 23,000 or sub 23,000 in the current run up.
We have seen a noticeable decline in the markets recently. What do you think is driving this drop, and how significant is it in the lead up to the budget? What do you think?
So as we discussed that individually Nifty has declined by around 13 odd percent among individual sectors, whether it's high beta sectors like realty, infra, automobiles, they have declined in the range of around 25 to 30%. Banking as of the other an outlier. Lately, we saw some amount of corrective action. So the budget is starting on a very low footing. So if any positive expectations in terms of, so we will have to much more of data perspective in terms of it. If the fiscal deficit is lesser in the range of around 3.4% to 3.3% of GDP for FY26, that would be a good count. How the capex program goes through for the full year of FY26, because the elections have been pretty away. So the capex program would be very fruitful in terms of it, in terms of various sectors, whether it's railways, whether it's defense, whether it's infrastructure, whether it's PLI schemes in terms of automobiles, EMS, for the manufacturing sector, for the new manufacturing sector setup, the taxation part continues to be aggressive. So all these data points would be very fruitful to watch out for in this union budget.
Very well said. So, but what do you think would be the biggest challenge for the Indian economy at this very point? And do you think there are any good opportunities which, as an investor, we should look up for?
So in terms of challenges, the challenges continues to remain. So with the new presidency at the United States, the how the policies would be shape up over the next 1 to 3 weeks or 1 to 3 months. So that would be very crucial, because if you look at, there are no doubt more and more announcements which are related to the negative pessimism in the market. So which is getting been reflected over the last 1.5 month. Plus, above all, the depreciating rupee is again is a concern. No doubt it benefit exports, but we have a high import bill. So to control that, we will have to improve our export percentage into the overall pie of trade balance. So for that export perspective, we will have to improve towards textiles, and on the textile side, on the EMS side. So various sectors, we'll have to see that how the exports is shape up. So because if you look at 5% of our service exports is to the total US markets of the GDP, and in terms of the manufacturing, we are at just at 1.8% of the world GDP. So that 1.8% has to catch up in terms of the manufacturing. So the manufacturing, the percentage has to improve for the next few years so that exports becomes much more viable and India will lead up the higher GDP growth.
So my next question is more related towards that. When it comes to things like inflation, government spending, or economic growth, which one do you think the government will focus on most in the next coming budget?
So inflation a little bit has been under control because the crude prices continues to remain at this level. The US has announced that they are going to increase the production of their crude by around 25 to 30%, so which would keep the crude prices under check. So the government spending would be very key in terms of it in the various sectors, how they spend it, how they allocate more money towards defense, towards railways. So that would be very key to watch out for the infrastructure because that only will lead to the rewinding of the whole economy and put the economy back on track because the second quarter GDP numbers were at sub lower compared to it. So that would improve the whole taxation process, creating more and more jobs from the manufacturing side, from the servicing side.
Got it. Tell me one thing. Do you think, as an investor, with the last Modi 2.0 era, while the Make in India campaign was the huge success in a way, right? Do you think a government will look up for in the coming budget as well, which will benefit certain industries, certain sectors out there?
So the Make in India campaign, it was not just a campaign. We have seen huge amount of sectors being penetrating into through the Make in India campaign. Like you have the EMS, you have the renewable energy, you have the EV. So all these sectors have been a new bound into this same whole Make in India campaign. So we have seen huge amount of order books getting in through from the global companies. Lot of global companies have been getting into place in terms of the domestic structure, either in terms of data centers, in terms of the EMS. So this whole campaign has been put through. Now a Make in India 2 campaign has to be much more vibrant and useful for the whole manufacturing sector. So as we discussed, we have improved our manufacturing exports as a GDP from 1.8% to make it to a service level of around 5%. So that would see strong amount of growth, and that would again in turn help us to our appreciate in rupee and in terms of the overall benefit.
Got it. There has been a lot of discussion around short-term capital gain tax and long-term capital gain tax, especially from the perspective of retail investor. You think the government will introduce any changes to these tax structures in the upcoming budget?
So in terms of taxation benefit, government has very little leeway to change any structure. So if the status it continues to maintain the status quo in terms of the short-term capital gain tax at 20%, LTCG at 12.5%, then it would benefit. Because if you look at the pessimism is very low, there is huge amount of negative pessimism after a sharp corrective action over the last 1.5 months into the broader market, especially into the mid caps and the small caps, where the index itself has declined by more than 15-17%. Stock wise, it has declined by 30-40%. So the budget should continue to maintain a status quo. Some amount of free bet benefit would happen into the STT side and the option side because the option volumes have also deteriorated for the last 1.5 months post the eradication of the weekly expiry. So some benefit if in terms of the STT could benefit the retail investors at large.
Okay. Just to continue with the continue with my last question, how are investors preparing for this budget? Like, have there been noticeable changes out there and trends in the market as we get closer to the budget day?
So closer to the budget day, no doubt the news flow continues to remain pretty eventful. So we have a lot of news flow during this whole week. The budget is slated on 1st of Feb, that is a Saturday, where the markets are functioning in full day. Before that, we have the monthly expiry for all the sectoral indices. So it would have huge amount of rollover activity into individual sectors and stocks. Plus, you have the US Fed rate interest rate decision, where a consensus estimate is a 25 basis point rate cut. So if we do not expect a significant rate cut during this month, in terms of the US side, then we could get prolonged. So markets would be a little bit jittery. But as we discussed, that markets have declined pretty 13-14%. The consensus earnings continues to remain at 1080 for FY25 and near to 1180 to 1200 for FY26. So we are at 19 and a half times earning estimates in line with the 10-year averages. So the risk reward ratio may be a 3 to 4% decline on the downside and 15 to 12% upside, again still near to the previous all-time high, would be expected over the next 6 to 9 months.
Okay. As you mentioned earlier, that you have mentioned a couple of segments and the categories in the past, while we were having this discussion. You highlighted EV, you highlighted manufacturing, you highlighted multiple other categories out there. Like, are there any specific industries or themes that you think will get government's attention in this budget? Which areas should be people keep an eye on?
So if you look at the whole structure post the election results, we have seen a good amount of corrective action into the defense space and the railway space, where they have witnessed good corrective action. So the CPSE, the PSC index have declined by 25-27%. The order book continues to remain pretty promising. So the bulge of the correction has been put through, and any positive announcement comes in through in terms of defense, whether in terms of nuclear energy, in terms of railways with new Vande Bharat trains coming in through across part of the India, the metro part of the business. So the railways, this sector looks pretty promising. So this have witnessed good price correction and time correction over the last 7-8 months. So this sector looks pretty promising. Infrastructure could also be good play. From the manufacturing side, if they continue to have some amount of subsidized taxation in terms of for the new manufacturing units, and that would also be a fruitful play to improve the whole manufacturing space. The automotive EV part would also be a good play, and some taxation benefit happens through into the consumer side, where the taxation part has been increased from higher disposable income into the hands of the consumer, which would get spill over into the real estate or the automotive sector. So this sector looks pretty promising.
Okay. So that was it. We would connect again, like post the budget is announced, and we would like to get some more of your time for our viewers out there. And thank you for your time, Vikas. Thanks a lot. It was pretty insightful, the whole conversation, and I hope our audience also finds it more insightful. So we'll connect soon. Once again, post the budget is announced. Thank you
Thank
for your
you.
time.
Thank you for your time.
Thank you so much.